So currently the inflation rates for the US dollars from the Federal Reserve are 5.5%, which is pretty high. And the general consensus from market analysts is that the upcoming FOMC meeting will maintain that inflation rate. They don't expect them to increase it or to decrease it. So if they do increase it, that would most likely, give some fuel to our DXY run, very clearly give us some clearance and support and push us higher, which also will then very likely sell off the equity markets, and we'll see the SPY QQQ start to sell off. So we definitely are keeping an eye on the FOMC meeting news. And like I said, that's going to be about a week from today. And so for the next week, it's most likely going to continue what we're seeing here on the weekly, probably going to continue to cool off. The stock market's probably going to have a decent green week this week.
Decent green this week. And then next week, everything is flat until the FOMC numbers,
and then out. Generally, you might get a little bit lower trading volume on the markets and a little bit more volatility. So, we might see the VIX. The VIX index might come up a little bit leading up to the VIX, by the way, is the volatility index on the stock markets. So that, it goes up if implied volatility increases. That's kind of a little bit too deep for right now. But yeah, this is really an interesting one. I wouldn't mind if you toggle this to the monthly, because like I was saying, the weekly does look like we're near the top. But ooh, baby, lots of room.
We talked about this, and we talked about this. I think like the last time we spoke about the DXY is the fact that like we got a bounce a month. The monthly close was pretty bullish.
Yeah,
like it's a bullish engulfing candle here, and a bounce on the strength band, and there's a lot of room on the starch to like.
Yeah, this is bullish all around.
So if this month also closes bullish, then like it could be trouble for.
Yeah, equity. So if Jerome Powell, the chairman of the Federal Reserve, comes in hot and raises the interest rates, that can definitely see us move the DXY much higher, especially on the longer frame timeline here, and that'll be wonderful for people who are in cash, maybe a little bit scary for people who are heavily invested into equities.
Right.